this is lecture video 3 for this topic number 6. Okay, so before this you have seen classification of cost. You have seen how cost can be categorized as manufacturing cost, non-manufacturing cost, and then what else? Prime cost, conversion cost, product cost, period cost, variable cost, fixed cost, and then here, okay, this is the next thing in this topic. This is the last thing that you have to know in this topic. Remember this, when you learn about management accounting, the focus is on most of the time the focus is on the manufacturing business, because a manufacturing business has to pay many costs. So when you do or you learn management accounting, you learn about cost and then learn how to make decision, to make good decision for the business. Service business has no cost. The service business has many expenses, but the service business does not produce anything, so it has no cost. Cost, remember the simple definition of cost. Cost are things that a business has to pay when the business produce something. So when a business is a service business, the business does not produce anything, so there is no cost. And also when a business is a merchandising business purchase finished product and sell the same product to customers. So what is the cost there? The cost is the cost of purchasing cost. Let's say you have a grocery shop. You purchase bread, sugar, rice from supplier. That is your cost. And then you sell the same thing, the bread, rice, sugar, to customer. So you will get profit. Revenue minus cost, you will get gross profit, and then minus expenses, you will get net profit. So so remember, when you learn about management accounting, the focus is on manufacturing business. You will learn about cost, etc. So here we focus on manufacturing business. See, so the main financial statement that a business has to produce is the balance sheet and income statement. So when a manufacturing business prepare a balance sheet, then the balance sheet should look like this. Okay, one is the unique thing about manufacturing business balance sheet is, in the balance sheet the business has to list its current asset. So see here, for this manufacturing business, the current asset is cash, account receivable, and inventories and supplies. So inventories for a manufacturing business has 3 form of inventories. The first one is finished goods, the second one is work in process, and the third one is the material. So always remember, you have seen in the previous slide also, I have explained that if you have a manufacturing business, you will have 3 types of inventory: direct material inventory, work in process, and finished goods inventory. So when you prepare a balance sheet for this kind for a manufacturing business, you have to show all these 3 types of inventories. If you have like this one, if you have a merchandising business, then you only have 1 type of inventory. So see here, current asset, cash, account receivable, and merchandise inventory. Remember, a merchandising business A merchandising business is a business that purchase finished product and sell the same product to customer. So the only inventory that this business has is the finished product or merchandise inventory, finished goods inventory. The business does not have raw material inventory and does not have work in process inventory because they do not manufacture anything. They purchase finished product and sell the same product to customer. Okay, so that is about the balance sheet. Other than this, the balance sheet are sick. So there are three types of businesses: service business, merchandising business, and manufacturing business. When you prepare the balance sheet, everything is same except the inventory. Okay, the inventory. A manufacturing business has three types of inventory. Remember, a merchandising business has only one type of inventory, but a service business has no inventory. A service business only has supplies. Okay, now this is about the income statement. Okay, now remember our focus is on focus is on a manufacturing business. Okay, so when sometime you have to prepare an income statement for a manufacturing business. So when you have to prepare an income statement for a manufacturing business, then you have to use this format. Okay, the format is like this. First, you have to show the sales. See in this slide, sales, you have to show the sales, and then minus cost of goods sold. So how to calculate the cost of goods sold? First, you have to calculate the cost of goods sold, you have to follow this formula. First, finished goods inventory, you have to show the finished goods inventory, and then plus cost of goods manufactured. In this example, the cost of goods manufactured is 290,000, and then so you will get a number. In this example, 350,000, and then minus finished goods inventory, 62,500. So the cost of goods sold equal to 287,500. So see here, sales minus the cost of goods sold, you will get gross profit, and then minus operating expenses, you will get net profit or net income. So now, if somebody asks you to prepare an income statement for a manufacturing business, you use this format: sales minus cost of goods sold, and then minus expenses, you will get net income. When you calculate the cost of goods sold, the formula is finished goods inventory plus cost of goods manufactured. Okay, so how to calculate the cost of goods manufactured? To calculate the cost of goods manufactured, you have to prepare a statement of cost of goods manufactured. Okay. When you prepare the statement of the cost of goods manufactured, you got the number and you put the number here in the balance and the income statement, and then you can calculate the net income. Okay, so I have a sample question here. Top 1 manufacturing company had the following account balances for the month of January. So there are many items here, and then the question asks you to prepare a cost of goods manufactured schedule or statement for the business, and then prepare a cost of goods sold schedule for the month of January. So okay, this is the way to see the last slide. This is the way to calculate the cost of goods manufactured, or we call it COGM, cost of goods manufactured schedule. Okay, in this slide you will see the cost of goods manufactured schedule. First, you have to show the direct material cost, and then you have to show the direct labor cost, and then you have to show the total manufacturing overhead cost. Okay, in this example, the direct material cost is 378,000, direct manufacturing labor is 480,000, and then the total overhead cost is 790,000. So the total of these three costs is called manufacturing costs incurred. And then after that, you add the beginning WIP inventory and minus WIP ending inventory. And then you will get the final number, which is the number for cost of goods manufactured. In this question, the number is 1,617,600. Okay, and then after you got the number for the cost of goods manufactured, then you can calculate, or you can show the calculation for the cost of goods sold. In this example, the cost of goods sold is like this: beginning finished goods inventory plus cost of goods manufactured. See, you calculate the cost of goods manufactured first, and then you put the number here, cost of goods manufactured, and then minus ending finished goods inventory, and then you will get the cost of goods sold. If the question asks you to prepare an income statement, then you show the revenue first, minus cost of goods sold, and then you will get the gross profit, and then minus the expenses, and then you will get the net profit or net income. Thank you very much. You can communicate with me in the comment section, and that's it.